PayPal has been hit hard. It's down 80% from its all-time highs. Let's take a look at it right here, right now. Guys, remember, I own PayPal, but you should never, ever buy a company because I or anyone else on the internet owns it. We're here to teach a process. Mo, PayPal is down 15% year to date. It is up from its 52-week low. Just back on October 27th, $50 a share. Now it's $64 a share. That's an increase of 28% since October 27th.
Just like the NASDAQ.
Just like the NASDAQ,
since
yes.
October.
Yeah, it's incredible, isn't it?
Up 3.3% today.
Up 3.3% today. It's a $67 billion market cap business. Well, one thing I really like about the company, their 5-year average free cash flow is $4.3 billion. Their 5-year average net income is $3.34. Cash flow is down in the last 12 months. Let's go look at that first as a let's see if there's anything jumping out at us. I wonder if how much of that $5.37 billion was because of COVID and all the online shopping that was done. And that's why they made so much in the year ending September of 2021.
And the second quarter of 2023, if you look at their quarterly, they had a loss of $350 million. Every other year, every other month, or every other quarter, was positive $1+ billion. So
in terms of cash flow.
In terms of cash flow, yes.
Yeah, you're right.
So that could skew it a little bit.
Because like you said, June of 2023 was negative 350. June of 2022 was $1.080 billion.
Yeah.
$1 billion. So that's a $1.4 billion swing.
Yeah.
Yeah, you're right. Okay, that's a good thing to find out there. Let's look at the 8 pillars for our good friend PayPal. All right, cash flow growth is the only one that's an X. I love the fact that the price of free cash flow over the last 5 years is lower than the PE ratio over the last 5 years.
Yes.
They're buying back some shares. Low ROIC. Now, is that because they're growing? I don't know. I don't want to have my bias in there. But the good news is a higher return on invested capital in the last year versus the last 5 years. Nothing to write home about. But, I look at PayPal, and one of the reasons I like PayPal is they have Venmo. They own Venmo, and it's a great place for secure transactions in the sense of when I'm trying to buy something, I know if I use PayPal, they're probably going to go in my favor if there's an issue.
Yeah. I've never had PayPal rule against me. I've probably made 2-3 claims in the past, 15 years, whatever it is.
So, again, there's, somebody posted on Twitter recently to me going, PayPal's a dying business. And I was like, I'm looking at their revenue, and if this is dying, it sounds like what people were saying to me in 2012 about Microsoft. Microsoft's dying. And I'm like, well, then how do they have record revenue every single year?
And record
profit.
Near record profit.
Yeah. For Microsoft, it was. For PayPal,
near record profit.
The whole point is, where as we talked with William Green, stocks follow earnings, right?
Yeah.
Stock price follows earnings as long as you pay a reasonable price. Now you have to look at this. All-time high, July 26, 2021. A mere 2 years and 5 months ago, we were at $3.10 a share, and now we're at $63 a share, an 80% drop. So again, news follows the stock price. People now telling me PayPal's dead. It's not, well, is PayPal dead or is the stock down?
And what was the news at that point in time? It was people are buying everything online. They're going through PayPal.
Yep. And that's why the stock skyrocketed.
Stock price to 310.
I mean, look at it right here. It was at, guys, we're at pre-COVID. We're below COVID levels. Yeah. The low in March of 2020 was $82 a share. And what was their, look at their revenue before then. Before 2020, the revenue was $17.77 billion. In the last 12 months, they've done $29 billion. So the stock is lower and revenue is 60 or 70% higher. That's something to think about. That's what we're trying to teach here on this channel is that when you see big drops in stock price, is it because the company is getting worse and there's a justifiable reason? Or is it because something shifted in the market and the stock that ran up is now coming down? Those are the differences you have to look at, okay? Yeah. A lot of stocks, like the workhorses, Nikola's, the ones that went down 90, 100%, Peloton, Tattooed Chef, we were like, wait, there's no substance behind these companies.
Right.
There's not a lot of substance in the sense of growing profit.
Sometimes there is no profit.
Right.
Never was.
Yeah. So we always say about 80% of the time, there's a reason why a stock is falling. 20% of the time, it's just sentiment. Okay. So that's what we're trying to differentiate here. What are analysts saying about PayPal?
Really good estimates.
Oh my gosh. Doubling their profit in the next 5 years.
Yeah.
Doubling.
More than double.
Holy
And
cow.
if you look at the revenue side, 30.32 this month, and in December 2028, 51 billion.
Wow.
That's huge growth for a company that's this mature
And dying, according
and
to people.
dying.
All right, so let's go to Stock Analyzer tool. Let me see when's the last time I did PayPal in our Stock Analyzer tool. Guys, before I get into that, we have a very active community of thousands of investors. We have the software here with lots of tools. If you're interested in learning about it, go to everythingmoney.com. We have a 7-day full access free trial, 7 full days. Nothing is held back. You get full access to it. Everythingmoney.com. Go check it out. So Mo, I did it back on, November 29th.
Okay.
So very recently.
Mine
When
was
did you do it?
September.
Okay, so here are my assumptions. I did 4, 8, and 12% over the next 10 years.
All right. I did 3, 7, 11.
Okay, so a little bit lower than mine. Profit margin, I did 12.5, 16.5, and 20.5%. Only because, and this 20.5% is big, but they have a good gross margin, over 50%.
Yeah.
So as they drive that revenue up, they're going to drive a lot more to the bottom line.
Right.
Okay, so I was okay with that. What'd you do?
I did 12.5, 15.5, 18.5.
Okay, that's probably, I think I'm going to go with yours. I'm going to be a little more conservative in this number.
Yeah.
Free cash flow. Now, free cash flow has been, for the last 5 and 10 years, you look, significantly higher than profit margin.
Yeah.
So I did 16, 20, and 24.
I did 17, 20, 23.
Okay. So you were higher on the low, same on the mid, and lower on the high.
Yep.
Now, what PE did you assign to it at the end of 10 years? I did 13, 16, and 19.
So I did 16, 18, and 20.
Oh, wow. You did a higher PE.
Kind of like yours.
Yeah. And the reason being is it is still a very crowded space. And I was like, okay, let me see if I can beat this thing up. Now, here at the bottom, my desired annual return. Remember, guys, this is your margin of safety. On this one, I have 10% just to show what would be worth normal market returns. I'm going to do 9, 11.5, and 14%.
Okay. I did 10, 12, 14.
Okay. Now, remember one thing, guys. These returns are based on what price I have to pay, as we show it below, what price I have to pay today if all these assumptions occur to make that return. Okay. So I hit the analyze button. Boom. 50 to 65, high side of 120 to 150, middle of 80 to 102. Mo, what'd you get?
I have 44 to 60 on the low, 102 to 127 on the high, 68 to 88 in the middle.
Great. Thank you very much, guys.